Morning, everyone. Welcome to another episode of Sunday Special. Joining today with by Helen Chorley, Adam Lawrence, and Jay Howard. Still hidden in the background, but with us, and as usual, bringing us phenomenal new words and fantastic insights. So today is we start as usual with a recap of Adam's Sunday supplement. And then as we go into the show, we'll cover the questions that we have left from last week and any new questions. So if you guys have any more questions, just drop them in the chat and we'll come back to them and we'll answer them as well as possible. And also welcome to everyone who's listening to the show for the first time, because we are now on Adam's LinkedIn, on Jay's LinkedIn, on Helen's LinkedIn, my LinkedIn, our Facebooks, YouTubes. We're like a small BBC. So yeah,
maybe the B, just the B, just the half of the B. Maybe. Yeah.
Adam, over to you.
Although arguably more objective, although did I say that out loud? That's the way to stir it up in the first minute, isn't it, really? So the majority of the supplement this week is really focusing on some of the stuff that's happened in the US. And I know that people think sometimes when I do that, why do I do it? What's the point? What does it matter to UK property investors? But the thing is, because we've had such a clear pattern of how the pandemic has played out, and because the US have done what the US do, which is deal with these things head on, like you're running at an express train, and kind of like he says in Rocky IV when Drago says, if he dies, he dies. That's kind of the US economic policy approach to their citizens. What I would theorize is that we get to see in this instance quite a bit more quickly what will happen potentially in the UK when we're a few months further down the track. Now, that's not the same as saying, oh, the Bank of England always follows the Federal Reserve, which is a statement for which there is no material evidence realistically. There are global pressures at the moment, and there are more global pressures than there usually have been, despite the fact that the world really wants to try and get divorced from a lot of its partners, just like we did from the EU, and just like a lot of other countries are seeking to do from China as and where they can, although with Belt and Road and things like that, it's going to be incredibly difficult. So I focused on the US because, as usual, there's a few contrasting signs come out, and the US yield curve looks like I've not seen it before during these quite crazy times, where you're talking about a very short-term interest rate that numbers around about the 5.25% to 5.5% mark. And then within 5 years, they see the 5-year bond yield at 3.25%. So there's a full 2% drop. It's like coming down a huge slide and sort of cratering and then sort of steadying. Whereas the UK bond yields, luckily for those of us who rely on the 5-year debt cycle, which is quite a few property investors and quite a lot of businesses as well, as it goes, the 5-year money still doesn't look terribly expensive. And what I've tried to explain today is, what's that actually saying? What does it mean? Well, what it means is what the market still sees is that we think there will be, in aggregate, every actor in the market thinks that there will be this period of higher rates. And then relatively quickly, the central banks will have to capitulate and lower the interest rates. And I've got a really big concern that the market is wrong. Right, I'm really concerned because what I'm hearing again and again now is, and there's some reason behind this view. People have kind of waited 6 months to wait for Liz Truss to blow over. Right, so we're nearly 8 months past her election now, although many of us still carry the scars, of course. And the housing market, even nationwide, have been the most bearish of all the commentators. Have admitted that prices have moved up 0.5% in April. And this looks like stabilization. And as I've been saying for the past 6 months or so, it increases the probability that this year we might see what a relatively flat housing market in nominal terms. Now, because inflation is raging away and wages are going up so much, that actually makes houses a lot more affordable for people, which is good. What it also means, while rents are climbing, if capital values stay static but rents climb, it means that yields are improving, which from an investment perspective is what you would expect to happen to get more investors into the marketplace, which they desperately need at the moment. Although there is a politically a zero chance of anybody coming out and saying that when we're this close to an election. They'll just let the market hang, and the poor old tenants will suffer another 18 months of seriously restricted supply before anybody even thinks about doing anything about it. And given that we're still odds on for a Labour majority, what they will do is, unfortunately, from listening to a lot of their rhetoric on housing, more likely to be guided by ideology than it is by sense, good facts and outcomes for the tenant, which will be a real shame. I don't think it will be a real shame for the investor. I think it will be really, really difficult in certain parts of England, particularly the southeast, for affordability. I think affordability is going to start to be a real problem. I think we've only seen sort of the start of that. So the big, bold type, shouty, capital letters message today was, if you are sitting and waiting for rates to come back down before you sort your debt position out, do not do that, right? Do not do that. I think that is very dangerous. And I think that this longer, higher rate environment could go on a lot longer than people think. And there's a lot of evidence for this. I think now it's kind of proven beyond doubt that the world's come around to what's been mine and a very select group of a very small number of commentators' point of view over the last 2 and a bit years, in that inflation is secular. It's here. It's entrenched in the core of our societies, especially in the UK. The UK's got a much bigger problem than the EU and the US. We're a full sort of 150 basis points higher on inflation, on our core inflation, which is what is going to drive prices and wages and prices and wages. And we're going to continue playing this horrible catch-up game until something somewhere breaks. And the role of the central bank here is to be politically unpopular and to be strong, right? And to effectively nearly break something. So the chance that we've been seeing modeled and talking about of this sudden gigantic drop in inflation from 10% down to 5%, miraculously for no reason that I can see and with no economic underpinning to it, is looking less and less likely to happen. And we're running out of months for Rishi to get to his pledge of halving inflation. You know, when he announced that target, I thought, it's not that ambitious, but I guess he set it because he thought he was going to smash through it. But having said that, we've seen double-digit inflation persist, you know, nearly every month since August last year. We're nearly a year into double-digit inflation. And again, the headlines don't really reflect that. And if you go back historically and look at times when core inflation has entrenched itself in society, it is 2 to 3 years to get it to calm down, whether you're in the midst of a recession or not. And ultimately, from a technical perspective, we're not in the midst of a recession, although going back to last week's article, everybody is poorer, right? But we're not in the midst of a recession. I kind of stayed away from, I played around with coronomics, but it didn't sound enough like the coronation for me to have a real go at it. And, you know, I think maybe later on we might comment on the gold carriage during the cost of living crisis. But what I saw, and I think I would give a tip to, is a couple of things really upset me yesterday. I'm not particularly political because I just pretty much seem like I disagree with everybody. And I try not to have a default position. I try to think through everything. But what I did see was a lot of people who were there was obviously a lot of anti-monarchy protesting yesterday. And I couldn't help channeling a bit of inner Peterson, thinking, I wonder how tidy those people's bedrooms are when they're out on the streets protesting against this terrible monarchy. You know, we'd much rather be liberated and have a republic like the US, or no, actually we wouldn't, would we? Because it's not better, because you can still elect someone who's a psychopath, and it looks like he belongs in the WWF, not in the White House, realistically. So you tell me that it's better. The economic arguments, of course, are there that the royal family drive a lot of tourism and all the rest of it. The tax position has been questionable, but then again, show me a family that's worth billions where the tax position isn't questionable. That might be a better way to have that conversation. But what annoyed me and what irked me and what upsets me really is that I see people who've got little kids who are dragging them along with their political ideologies and beliefs. And I feel like my own children, I try to invite them to think for themselves. So I asked them yesterday whether they wanted to consider pledging allegiance for the flag and what it would mean if they did and what it would mean if they didn't. And I told them they were free to choose. And of course, they inevitably ask what are you doing, Dad? Right? And I think it's important in those situations not to answer with what you're doing, but how you're thinking through what you're doing, right? And I think channeling your children to be ideological carbon copies of yourself is one of the weakest things you could possibly do, realistically, for their moral fiber and their ability to go through society. And that might be a bit strong, but I like to be a bit strong in these situations. I think you empower them with the tools to make good decisions, and I think you go from there. You don't do that. So that's why I left the coronation alone in text, but I've had a good go at it there in words, I think. And other than that,
thing you covered in your supplement was the U.S. banks, right? And what's going to
yeah.
happen when we come back from bank holidays.
Yeah, sure. So that's the other interesting part, because obviously there's still this amount of commentary going on about, is it like 2008, blah, blah, blah. There's tons of reasons why it isn't. And I've covered before a few weeks ago the difference in the capital adequacy requirements apart from anything else. The European banks went much stronger on those requirements, and the Americans were much weaker after 2008. What that's meant is the Americans have made more money, but they've carrying out a relatively fragile banking model from a capital adequacy perspective. First Republic was one of those, and now JP Morgan have been the beneficiary of them operating with comparatively thin air compared to a lot of the European banks, right? We've said before about why this is different from 2008, because in 2008 you had a dramatic repricing of a basket of assets that a lot of people didn't understand, and then an erosion of faith in the system. Whereas this time around, you've got, as we sit today, you've got a lot of people sitting on fairly big losses from 2022 because they lost money in stocks and they lost money in equities. And they made a metric ton of money in 19, 20 and 21, but that's all forgotten. They care about what they lost in 22 and they want to get it back, right? So you've got that sitting on one hand, but you can't sit in cash at the moment. It's the most expensive time to sit in cash because of inflation. So they're doing what I'm telling people not to do and sitting on the sidelines waiting for the inevitable. Whereas the inevitable just hasn't proven to be that inevitable, because the 3-month 10-year yield curve has been inverted for so long now that it's going to get towards a historical level before it breaks, potentially, in the US, although I do still think it will break. So another year out of the market is going to be damaging. There obviously are problems in the US banking system, and more of these are going to come out. I wrote about Pac West, which does sound like that 1980s arcade game to me, and I could only visualize the little guy gobbling the bills. And there'll be more. You know, one of the fundamentals here, and it is fundamental, is that the higher rates have put more pressure on the bank's business model, right, at a really simple level, because they did get money for free, either from each other, the central bank, or their depositors who were expecting nothing in return, and now they've got to pay money for it.
Yeah.
Right. And if they don't pay money for it in this world, now we've got a Nutmeg and a all sort of interactive investor and AJ Bell and goodness, the other providers are available, of course. Then people can go anywhere at the click of a mouse to get bond style returns at a decent click. So why are you going to leave more than 85k in the UK or 250k in the US? And I in Rod's recent quarterly investment mastermind that I do with Rod and manage, I chose the US regional bank index as a bit of a punt. And I did say in my defense at the time, I wasn't trying to time the bottom, and the bottom hasn't come, but it might have come now. So if I was involved in that, I would be pressing my action upwards at this stage, because the JP takeover of First Republic paves the way for consolidation that the US regulators have tried to avoid, right? But when the back's against the wall, whatever you've tried to avoid doesn't really matter. And look, JP were too big to fail anyway, right? So now, if they gobble up a few of these, and so do Goldman's and Merrill's and whoever, to keep pace with everything else, then this is what the sector kind of needs. It doesn't need banks with 100 million of deposits. You know, there's been property groups that have, I would have thought, are relatively on the SME scale of things, that have gone broke in the last 12 months, that have had similar lending to some of these small US regional banks. And I'm willing to guess the oversight's probably roughly about the same, if I'm honest with you, but that's another conversation. And that's obviously concerning, but I think it's an opportunity for them to come together, because they need to consolidate, they need to cut costs, they need to go more digital. and there isn't necessarily room for 4,300 regional players. Does that mean a banking crisis? I don't think so, because the capitalisation rates are still good. Do they need to change the rules in the US to move the capital adequacy ratios more towards the European ones? They do, and it would be the first time in history that a government has been proactive, or at least semi-proactive in the midst or middle or maybe beginning of the middle of a crisis, and actually done something before the collapse and then the post-mortem and all the rest of it. They could ask them to post more and accept lower returns on equity, right? While the model is suffering because of the higher cost of their money, it's not a great time to do that. And you could argue that that might tip the scales too far the other way. But of course, you can signal it without making it happen tomorrow. You can signal that it's going to need to happen over the next 2 or 3 years, or similar. I also wrote a little bit today about the digital services tax, which is never really spoken about, but it was one of those things that was introduced. And I think it's one of those where I end up blaming the media for this stuff, because people still moan the same as they ever did about Google and Amazon and all the rest of it. But Sunak actually introduced the digital services tax, which is 2% on their turnover in the UK. So these companies can't get away with paying nothing. And I think it was 9 of the companies who paid it, and it wasn't very many companies who paid more in digital services tax than they did in corporation tax. So the mechanism is there to extract value. And I think this is what both the Conservative and the Labour Party lack at the moment. You know, I could never be in politics because I speak too freely, and I wouldn't do it anyway because the personal cost I would deem to be too high, even if I had a crack at doing any of the frontline jobs that would be potentially useful to the country, right? I'm afraid I'm too selfish. I've decided that years ago, right? But if I was, I'd be a bastard, because what I would do is I would entrap a lot of these companies into building lots and lots of things here, and then I would tax them as much as I possibly could over the longest period of time in order to make the state bigger and more efficient. I'd then have most of that activity carried out by the private sector, because it would be more efficient than the public sector carrying out. And everybody would hate me, pretty much. There'd be about 3% of people who agreed with me. But I'd also know that I'd be doing the right thing. But that's my election manifesto over anyway. And that's pretty much that's pretty much where I went to this week. But yeah, the big that big takeaway. And also, I did put a slice in there. If anybody ever does or considers lending money to people, because I had a conversation with someone this week that was about north of £10 million sum of unsecured money that had gone into backing a property group. One guy had headed up the fundraising, and I felt for him because it's him and his friends and his family, and then his wider network are looking at what sort of loss I don't know, but they're looking at a loss. It's going to be difficult, and it's always difficult in receivership situations to extract max value. So there's a potential maybe I can help him keep those losses down to less than they would otherwise be. And that's what I'm going to try and do as my corporate social responsibility. And I might be able to nick a few quid out of it as well. Of course, I'm not doing it for free, but I'm not promising anything. But if I do, it'll be a hell of a case study. And then I might just turn myself into someone who just hangs around waiting for the next guru to go pop, because it could be potentially so profitable to pick the pieces up. But again, that would make me about as popular as someone who went into politics and told the truth. So not that there's already posters up of me running for president or whatever, but it certainly cement that one for all time. So yeah, covered a lot of ground today, really. And thank you for the platform there. Rant over, breath intake. Over to you guys.
Okay. It's still early doors in the conversation, Adam. There's plenty of room left for ranting. Don't count yourself out the race too early.
Wow. Nice. Well, I've got a few questions, and like this is one from today, from Guy. It's more of an observation and a question. Interesting numbers as always. I always worry about the continued inflation issues. In the US, one of the differences is that mortgages are on full term, normally 30 years, fixed rates. Does UK measure inflation in a different way to other countries that disadvantage our numbers?
You know what? There's two really great points in there, Guy, and thank you for that. One being that this has made the whole 5-year debt cycle that we use in the UK. And I mean, most people who've ever used the 2-year fixed mortgage, I think, have probably shelved that idea for all time. I certainly hope they have. Some of them won't have done because they'll be thinking, wait 2 years for it to blow over. Again, I'm pretty concerned about that viewpoint, to be honest with you. I think if the business doesn't work on 5-year debt cycles, then the investment doesn't work. So it's made us look a bit silly. And there is a bit of a push more towards 7-year and 10-year products. The good thing for us is the 5-year and the 7-year bond are about as the lowest levels of the bond yield curve at the moment. So that will also nudge people in the right direction. And they need some nudging from the PRA, to be honest with you. But again, this would be the very rare proactive regulation rather than the usual reactive regulation. So I'm not holding my breath on that one. But the short answer to the inflation question is probably twofold. One, no, not really. They all try and fix it as much as they possibly can to keep it as low as possible, although they can't hide things like the food prices at the moment. But really, I think the point is that the US and the UK differ very strongly in their element of self-sufficiency. And ultimately, you know, shale has been massive. Look at the way that the UK and the US have approached shale, right? You know, we don't want fracking in the UK, but we'll import the oil or the LNG or whatever from anywhere else that's fracked. So it's not really an ideological position against fracking. It's a NIMBY position against no fracking in my backyard, realistically. And or the US has more earthquakes anyway, so what's a few more? Maybe that's also part of the logic. But the US became self-sufficient again in oil, as you know, and that was extremely powerful, although the use of their strategic petroleum reserve is just not very strategic at the moment, and how hard that will come back to bite them, we will learn one day. I suspect fairly hard. So it's more, what does the UK have to rely on in terms of its climate, the food that we like to buy in the supermarkets, and also our energy, and therefore how prone are we to inflation? Now, we should also say the UK historically has always run a little bit hotter than the US on inflation numbers anyway. So when the US hit 9, that's probably more significant than the UK hitting 10, and probably around about like the UK hitting about 11 like it did in October for the 1 month that it did until the energy price cap came in. And that's one of the reasons why we had to take a bit more extreme action. You know, the energy price cap was actually the right policy at the right time. So I wouldn't give Liz all the credit, because the policy had already been mooted and played around with, and primarily came from Labour, as quite a few of the policies have done worryingly over the last few years. Worryingly for the Conservative Party, I mean, because they really need to do their own thing rather than rely on everybody else to do it for them. It's really a difference between, you know, what we would be used to. And the other difference that there is, however, is the US is much more advantaged as a nation by inflation, because their debt level is just so very, 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 very high. And if there is anything in the move away from the petrodollar, you know, the US could have a really, it's stopping me at the moment from putting too much money towards US stock markets, because I understand how much more my stock portfolio is overexposed to a country that might, and I just see an economic nuclear winter for the US if they did lose enough of the global currency reserve status. So sterling is taking a kicking since 1933 or whatever on that basis. So it's not as big a deal, and people will still want to hold dollars like they still want to hold sterling.
Yeah.
But nonetheless, it's a concern. So in short, they don't mark the homework particularly differently. There are other measures like Visa and MasterCard have a pretty good, what do people using their cards spend money on, which obviously you deem to be a pretty damn accurate, rather than people in the ONS looking at patterns and adjusting things. But I mean, I think in fairness, the ONS is one of the most honest or governmental or non-governmental organisations that exist in any country. And that is part of the fact that we have a pretty good whistleblowing culture, the fact that we do try and do things properly. And it's when people like Truss ignore bodies like the Office for Budgetary Responsibility, despite how scathing I've been at them recently, they do a better job than Kwarteng and Truss would ever do. Right? That's why they exist. So that's not so much the case in the US, where regulation is even more watery generally than it is in the UK. So just a slight drift there, but yeah, really good question. Thank you.
Well, Matt, who's a regular viewer, has reminded us Dominic had a great question last week. Well, that's a good segue to get into questions from last week. So this is one for perhaps Helen can get this one. What do you think about the venture? So that's from Dominic. What do you think about the venture capitalists who swoop in, buy the big retail brands, sell and lease back the property portfolio, leave the company service inflated leases and borrowing debt, make millions in bonuses, then they fold? For example, Debenhams.
I think Dominic probably knows what I think about that, but it's an inevitable part and dynamic of when you've got a free market. So that always is going to happen. I guess the bigger question around it is if we don't like that, if we don't like that kind of operating procedure, how in a free market do you stop or disincentivize that? You saw it in banking, you see it with hedge funds. There's so much money involved. There's so much brain power involved with these people. They're a step ahead of the regulators at every turn. So they're always going to be looking. That venture capital is the same. That is their purpose, to exist, to look for those, not gap in the market, but those teeny little niches to exploit, because they have the capital there and they can move quick and they can see it and the strategy is there and they know how to get in and out. So, ethically and morally is one question. But there's the pragmatism to it is it's always going to happen unless you regulate against it, unlikely with this type of government, or you disincentivize it somehow from a tax perspective. I don't know, you do that. Or what it makes me think about is after 2008 when they, I'm trying to think exactly how they did it, but basically were to stop the bonuses kind of landing and the short-termism in investment banking. I think they extended the vesting period of people's stocks, i.e., so in just layman's terms, you got paid these big bonuses still, but you didn't take it all home in kind of cash. I mean, you never did kind of on day one. They paid you that bonus over a much, much, much more spread out time. So if there was
clawback introduced, Helen, in what places, wasn't there? Yeah.
So if you could introduce a mechanism like that, that might be a disincentive. Oh God, I could go on for an hour, but let someone else have a go.
Another way to look at it, if you're a neo-socialist type, would be nationalisation. You'd nationalise it. You would remove the free from the market, and you'd nationalise these companies, therefore removing these opportunities from these venture capitalists, hedge funders. But I think it's a rather...
Are you trying to wind me up, Jay?
Purposely. You said that you were out of rant. I just wanted to see how true that was. I wanted to see if I could catch you in a lie, live on a Sunday morn.
Guilty as charged, Your Honour. Guilty, yeah. Nationalised failure. I mean, I think I agree with everything Helen just said. And the point is, failure has to have an element of health to it. Now, would you want to be, let's be realistic about people who make big money. So Helen mentioned, VC and all the rest of it. That's where the question comes from. But, let's go to the boardroom of Volkswagen or the boardroom of Pfizer or the boardroom of a whole number of other companies that have to make some pretty horrible decisions that really come down to money against human life, right? And you see, would you want to be around that table having that discussion saying, well, they're going to lose 8.7 billion from the pensions, but you know what? The regulator will sweep up, X per person because that's the pensions regulators guarantee. And the reality is we won't be very popular, but we're not going to mind while we're sailing in Monaco on the yacht, which is, I think, probably a relatively fair reflection of the Philip Green sort of conversation that would have been had. So how do you deal with those things? If you do, let's steel man what Jay's just said rather than allow my blood pressure to reach the ceiling level. Let's steel man it. So ultimately, if you're going to nationalise failure, everybody's going to pay, right? Everybody's going to pay in proportion. So despite the fact that the rich don't get taxed enough, according to everybody who isn't rich, ultimately they do pay more money per head, apart from anything else. So if the most of the failure then is going to be loaded still onto the middle class and the working class, who pay the majority of the tax because there's just so many more of them, but proportionally per capita, that's going to be loaded onto the rich, which might seem a reasonable way of doing it. However, if the incentive then becomes, well, it doesn't matter if we fail because the government will just pick up the tab. I mean, that is the whole blueprint for the banking crisis, right? And look at the behaviour that it did drive, because people knew they were too big to fail already, and now they're much, 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 much bigger. And the tech argument, for example, would be different, because would society not function anymore without Twitter? I don't know what taking it away would do tomorrow, because there's so many other ways to communicate, and there's copy platforms that are already set up, so it wouldn't be the same as a bank going down. And obviously Twitter is only a minnow compared to the very big boys. Amazon, well, God, people would have to go back to the shops, wouldn't they? Well, they wouldn't, because they'd still order online. They just wouldn't use Amazon, So they're not, a lot of these companies are not necessarily too big to fail. And what do you see from their financial performance? It's far, far greater than anybody who's ever transacted in business before. Warren Buffett has made more money from Apple, which, bear in mind, 10, 15 years ago, he said, I wouldn't invest in something that I don't understand. But what he did understand, when Apple started throwing off just inordinate amounts of cash to Bermuda or whatever, was they were making a metric ton of money, and it might be a good idea to get in on the action. And vault fast his position and bought a lot of, Berkshire Hathaway, one of the biggest holders of Apple stock. So all of those companies, my point is, who don't have any backstop really from the government or from anything else, and have just a clear drive and focus to get as big as they can, with an element of social good sometimes to what they do, although it can be badly misguided when they try and shape the direction of free speech, apart from anything else. That's how you end up with referenda and Donald Trumps and all the rest of it, by trying to marginalize people and tell them what to do. It's not the right way. You've got to prove to them that what they're thinking might need changing. That's the only way to do it, realistically. You don't get better outcomes. So to me, Dom, I wouldn't want to be one of those people, because I don't want to sit around that table and talk about the cost of human life. If regulations change, I want to be someone who runs a business that is already performing over and above the regulatory framework, because people live in my product, right? So I want it to be better than the regulatory framework, because now it doesn't mean the regulatory framework doesn't get it wrong. I mean, there's implications in the Welsh legislation that's led to the occupation agreements, that the tenant cannot be given any responsibility for there being damp and mold in a property. Now, there's independent surveys that point towards 90+% of those problems being somewhat lifestyle driven. And you go out and get a professional damp survey done. And we've had dozens of these things done at the request of lenders, because there is a real significant problem. And 90+% of them come back then. And not to say there's not other problems, which then, of course, we do go and get fixed because we're a responsible group, but saying that lifestyle is part of the reason. And I'm not standing in the ivory tower saying that, because I understand there's two real problems there from the tenant's perspective, right? One, they can't afford to put the heating on, and that, of course, has been absolutely prevalent in the last 6 or 7 months, more than it's ever been before. Secondly, they're not educated towards how to ventilate and operate a house properly. And some of that can also be due to overcrowding, especially in certain parts of the country where property is more expensive per square foot, because there's 4 people living in a 1-bed flat, and the 1-bed flat was never designed for all of that. So you must have these ventilation solutions, New Airs and other ventilation solutions are available. This podcast is not sponsored by New Air. But there are all these other style solutions available. So it wouldn't be for me to do, but the market does need a clearing mechanism, and it's best if that is a competitive clearing mechanism. Because if the government pensions regulator ends up picking up a £500 million bill rather than the taxpayer picking up a £10 billion bill, because all those people who are smart enough to do these turnarounds aren't going to go and work in the public sector. They're going to go and do something else, right? And then you'll be like, well, unfortunately, reality is no one will care as much because it's not their money and they're not as incentivized. So you just can't do this by nationalising the problem. Failure has to be a healthy part of business. We have a very poor attitude towards failure in the UK. The US are much better at it, but then you see some of the failures, like the one I was talking about earlier, the recent failures with individual guru style characters that are promoted by training companies to build portfolios that no one ever runs the ruler over them and goes, is this a good investment? Is it going to last? What happens? There's no scenario planning. There's nothing. There's just like, oh, I can raise 10 million quid of other people's money and gamble with it. That's effectively what was going on. Or when people were raising money for JVIP, which obviously was very high profile, and they were getting paid 11% commissions for the money that they raised. Anybody will tell you that's not a sustainable business model. Or if it is, then you have to ask why the person is offering to pay 11%, right? But generally speaking, it's not going to be 11%. Some of the deals that have been in the public domain with other gurus where they've offered 30% interest on debt in a year, that's not a debt level return. That's an equity level return.
No, I want to grab a red flag and wave it right now.
What is this, a broadcast for the National Socialist Party?
We should have one of those big sirens that go off whenever we hear these things, just flashing lights.
Press that buzzer.
But I mean, your point on failure, I think, is really interesting, because I think people don't see failure as failure; they see it as fair and unfair. And I think there's a really big social catalyst at the moment about fairness and unfairness. So, you take the point of a venture capitalist buying a company at distress, for instance, taking a look at the balance sheet and thinking, wow, the major issue we have here in this business is payroll. Payroll is one of the biggest outgoings we have in this business. So to keep the business alive, we're going to cull 80% of the workforce. Now, that could be as dramatic as an Elon Musk Twitter scenario as you raised, or as minor as a small accountancy firm, law firm, blah, blah, blah. And then people won't see it as rescuing the business and keeping that 20% of the workforce in work and the fairness of that, because the company could shut down, everything could close immediately, then there's 100% loss instead of a perceived 80% loss. So people will be focusing on how fair is it for those 20% to survive, and on what metrics were they able to retain their employment over the 80% of potentially disgruntled, add many other injectives onto that. But it's, and you're seeing it a lot. There is now no real focus on numbers and metrics and reality. It's all what is considered fair and unfair. And you're seeing that's becoming a global thing. There is now we don't have to focus on what really happened. We now have to focus on is everything being handled fairly, and who is being handled fairly, rather than the concept of fair in and of itself.
Well, this is where Peterson just gets it dead right, isn't it? Because this is equality of opportunity versus equality of outcome, and this is clean your room before you go out protesting about something, right? If your house is in order, he himself recommends, I don't know if he said this when you went to see him, Helen, but, get involved in local politics, get involved in what you can influence, right? Don't have a mess over here and then do this thing that makes you, this virtue signaling exercise that just makes you feel better. It is largely pointless, right? You don't have debate by indoctrinating anybody, right? You persuade people by making good arguments and having open discussions and having really difficult conversations. And your fairness or unfairness, Jay, for me, almost bleeds into you're almost not allowed to upset anybody anymore. Or you start worrying about what you're saying because, you've hurt my feelings. Someone commented, I put a post up, obviously it's tongue in cheek, I put a post up yesterday about people who write in with no punctuation, these huge long paragraphs of text with no punctuation. And I said it's second only to voice notes, which annoy the absolute hell out of me, right? And the person, someone pushed back and said, well, what about people who are dyslexic, right? And I said, well, there is a way in all of these dictation tools to read it out, but it still turns it into text for the other person. And what I didn't say, which I considered saying, was ultimately this is communication, right? So this is a two-way street. have been through lots of exercises over the years with how to communicate with people and what do they want and what do they like. And of course, negotiation is about communication. So it's really, really important to what we all do, right? But we don't start from the point of view of, well, what if this is me? Well, do you know what? There's still two people involved in the transaction. So perhaps explain it and see how the person understands it. I work with people.
You're on mute, Piotr.
You know, whether you want to harness it and use it for the best thing that it can be or the worst thing it can be. And I'm sorry to boil it down to aggressive mindset as much as that, but I really think that's the case, you know?
No, I have to say, oh, sorry, Helen, you were about to say something.
Oh no, just picking up on the Peterson point, he did actually like speak kind of specifically to that point. There was a question from the audience about from a parent with a kid in school. He didn't like the curriculum. He didn't like the way things were going. He didn't like this fact that you can't say anything and it's so politically correct and everybody gets upset at everything these days. He's like, do I take my kid out of school and homeschool them? And then, that's got challenges and social implications, or basically kind of like, what do I do? Have you got any guidance? And that was his exact point. He's like, you want to make change? Get on the school board and make change. Like, yes, you probably have a job, and where are you going to find the extra time? But what's most important to you? Do you want change, or do you want, like free time and, and to have those, like, you're going to have to make some tough choices here. But if you want to make that choice, you have to be the one to step up and do it if you feel that strongly about it. Sorry, Jay.
No. It's a really good point. I mean, I was just going to say there's a lot of social engineering going on. I mean, you think the arguments now aren't about right or wrong. It's about, are you a good person for saying this, or are you a bad person?
Yeah.
It's kind of a lot of the manipulation that went on years ago about if you had a different thought process or you had a contrarian view, you were made to feel stupid.
Yeah.
And then it was like, well, if you were smart, you would think like this.
Exactly.
And then it's always, you're being driven and directed by a signal that's going to make you feel bad about yourself. And I think that's going to have really interesting, from a completely agnostic viewpoint to the world, really interesting consequences in the next 50,
and
100
actually
years.
Being somebody that's made two contrarian choices in the last few years and been vilified at the time for those choices, not necessarily publicly, but certainly socially, and seeing how the strength of that opinion and how, when specifically data and stuff then comes out, and how those opinions start to change and soften. There's never an apology. There's never actually, yeah, I see your point. Though, and it's, thank God I do have like a piece of paper with a degree on it that I can, I can kind of bring my own evidence to the table to say, actually, I do have a brain, because your intellect, or in my specific case, my intellect was questioned. I'm like, okay, do we want to look at this like degree certificate? Because I think that proves something. Not saying that's the be all and end all and everything, but
I think it is. When it says PPE, it is. But yeah.
But you're like, yeah, but you don't have that. You don't have here's my moral responsibility, or here's that. I can't bring out a moral one and go, actually, I am a nice person. I do care about other people. Yes, absolutely, I'm selfish. Isn't everybody in some degree? I can admit to my selfishness. But you don't have a piece of paper that you can bring and go, well, here, look, it says I'm a nice person. So it's a nasty process to go through.
I think it's almost come. Go on, Piotr, sorry.
Yeah, obviously nowadays, like, people like, I guess, read less and less of like the classic things and the other kind of like things that then you could make your mind out of. Like, now we read like things that have been like through the process of like just processed, the processed classic thoughts that are like made to just be suitable for this time and for this person saying this, and then out of that, people don't really have their own kind of moral compasses and ethical compasses and just kind of knowledge they can rely on, like the foundations.
Well, this is why they want to bring back the Stoics, right? But what I was going to say was, this actually, I think, tracks back a little bit into the question that Dom asked, because the ultimate answer to me is I want to have a business that I can get up in the morning and look in the mirror and be proud of myself for having, right? And there's a number of facets that breaks down into. And there's a number of people out in the property community who I think, oh, they must make more money than me. But good Lord, I wouldn't be proud of their business.
Yeah.
And there's others that I look at and think, oh, they'd probably make more money than me. And look, oh, they're doing it the right way, which is fantastic. What can I learn from them? How can I improve myself in terms of getting towards what they're doing? Is it all about the money? No, it's not. It has to also be about the outcomes, and it also has to be about the sustainability. So thinking on a long-term footing rather than a short-term one. And anything that, you know, I filled in a survey the other day, and one of the questions came up was, have you ever suffered with any of these medical conditions? And the list was so long. I was scrolling and I thought to myself, you know, 15 years ago, you know, that list would have probably been 30% of the size that it is now. And some of those diagnoses will be helpful and important and help to extend people's life. And some of them, and I think it's not even that, it's more the attitude in which you approach that diagnosis. Does that help me to understand something that can make me change something, do better, be better? Or is that an excuse to hide behind, realistically? And that's the really, really hard conversation that I worry we're not having with children today in schools, apart from anything else. And I try and have in a bit of a softer way than that with my own kids as they get older, because I don't think, you know, at work, especially if they want to go into, you know, a law firm or a trading desk or whatever, no one's going to sit down and go, oh, you'll get a trigger warning before we read the 6 a.m. headlines. No, you won't. You'll get spat out, and you'll have a feeling of, you know, lack of accomplishment if you're not careful, and it'll suddenly change very, very quickly.
Oh yeah.
Okay, back to property. I've got last question from last week from Kwesi Johnson. And his question is, what would be your approach if you were a UK resident based out of the UK and want cash flow first and capital appreciation? Not quite sure if I understand being UK resident based out of UK.
Well, I think some of that depends on whether you're going to come back, doesn't it, to a large extent? And you know, why do people who are offshore based to start with invest in the UK? Well, they do because safety and security of money, the legal system, all of that sort of stuff. How do you, you know, in order to understand capital growth, I had a conversation like this with a friend of mine who lives in the UK now. He was born in Eastern Europe. He was brought up and educated in Germany and moved to the UK, has been in the US for a few years, but it's very clear that his long-term future lies in the UK. So for me, the first place that conversation from an investment perspective centers around is, what's the currency that's important to you? Because if it's going to be a different currency, then go back and look at the price of UK housing in the currency that you think is relevant, right? Because as we sort of referred to earlier, that kicking that sterling has taken over the last 80 odd years of not being the world's reserve currency, that is a long-term, very ultra long-term downward trend, right? That is likely to be continuing as the UK slips down the world's economic rankings, just because it's so advanced and it's really difficult to get growth in vastly advanced Western economies, right? So first of all, where are you going to end up? Second of all, why are you investing? Are you investing for protection, returns, etc., etc.? From a capital growth perspective, you know, I'm still reasonably bullish, not because there's going to be a ton of growth in the UK, not for any of those reasons, but because we've still got this horrific supply and demand imbalance problem. The only way we can continue to push the economy forward is likely more immigration, you know, that has borne itself out in figures, and more efficient immigration, I think, is something that probably everybody wants, even though, well, unless you're an extreme racist, you know, everybody's pretty comfortable with all of that. Most of it depends on how the media spin what the terrible migrants do to the society, coming over here, doing the jobs people don't want to do, paying the tax, sticking around, you know, all those terrible things that they do. So I think you've got to. It's just a bit of a broader conversation for me, I suppose. Piotr, is what I'm saying.
Mm-hmm.
Got a good question for you, just raising up the point about sterling over the last X amount of years. On what side of the fence did you fall on the decision to not join the EU in terms of, you know, our national currency being the euro over sterling? Like where did you sit on that?
In my defense, I can't say my real time position because in Maastricht I was 13, so I do need to make that clear. Although
Some people at the age of 13 were finishing their first degree.
They absolutely were, and that's very true. I'm contemplating their second. Yes, indeed. So I didn't have a position. The supplement wasn't riding, and I didn't have a position really at that stage. To be honest, I found it quite difficult to understand, and I didn't have any. Hadn't really gone and sought any economics training or textbooks or anything until I first studied at A level. But in terms of, I had a very, very, very good economics lecturer when I did my MBA, and he explained about the three major tenets of a union style arrangement like the EU. Because a lot of people don't realise, you know, like I think Cornwall occasionally says it wants to go independent, doesn't it, and things like that. But there are chats in the US about California and Texas seceding from the Union on a semi-regular basis, and I would be concerned that the direction of travel of the world is sort of going that way. My view, retrospectively, is that it's absolutely clear as a bell to me that the EU is doomed to failure because it doesn't tick a lot of the tests that you need for a single block to succeed. I mean, now's a great example because you've got one central bank with one rate of interest when inflation in Germany is already sorted and inflation in Latvia is 15%. So how do you control that? Well, you know, in times of low inflation, it worked reasonably well, but really it was more resources going to Germany and things that favoured Germany more than a lot of the rest of the bloc in reality. So the political union side of it, I think, is doomed to failure, right? And that will happen at some point. That could take 50 years. You know, there's a lot of people heavily invested in that project. And it's complex in Germany because there are historical reasons for them to want to be much, much closer to their neighbours and never be defeated again in any way, shape or form, or put at risk by the other world superpowers who get bigger and bigger, particularly Chinese. So that's certainly one side of it. The economic union side of it always made sense, still made sense, never made any sense when Brexit was going to include the hard Brexit line style thing. It was always value destruction. But the currency and the things that come with the currency, i.e. signing up to the central bank, you know, you tell me who it does make sense for, because at the moment, the interest rate doesn't make sense for Germany. And it'll be really interesting to see how much of what the ECB do when Germany and maybe, because, you know, you could go to a point where there's still a significant amount of the bloc suffering from inflation and Germany being close to deflation.
Yeah.
Who does what then? Who does what then? You know, and there will be action because in reality, deflation is more damaging than inflation. But there'll be some interesting alternative levers pulled by the ECB, I'm sure, if that sort of situation does occur.
When I was 13, I was thinking that having euro, every country should have in the world should have the same currency because it would be so much more convenient.
Well, it would reduce a lot of flux, but it would be kind of difficult to run monetary policy and money supply. You know.
Yeah. Now I realize.
Yeah. And luckily, we've got lots of tools these days. You know, in the early 90s, when we were first talking about this stuff, we didn't have things like Wise or whatever that could transfer vast sums of money at small margins. You know, it was a horrific system that was inefficient, and therefore big profits went to a very small number of people. Whereas there's a lot more global freedom these days, although perhaps not global, because that's why Western Union is still so massive in Africa, let's say, because people still pay 8% fees or above for sending cash to places, right? Because it's physical cash that needs to move. Although, having said that, a lot of countries in Africa have caught up much more quickly with mobile phone banking technology because it left a massive gap. It filled a massive gap, and there was a huge margin to beat.
Yeah, I think those national systems of transferring money between banks, those are super efficient, and they basically keep a lot of money in the countries rather than sending them back to Visa and MasterCard. Just I've been a few countries where there's, like in Poland, there's a special system just for Polish banks. In Portugal and Spain, there's like different special systems, and the people like retailers and people who take money payments, they prefer those national systems because they cost next to nothing comparing to Visa and MasterCard. So
it was interesting being on the trading floor actually when we moved to the euro, and a lot of, you know, kind of, I guess there's always scare stories, isn't there? But of, yeah, what was going to happen to FX revenues when you've suddenly got this chunk of revenue that's just, there's no market there anymore. But as we can all see, JP Morgan, still managed to survive. So
just about getting through, aren't they? Good old Jamie. Just about getting through.
It was fun to tell you what, that was a challenge of intellect. You've been thinking about, it was literally like switching languages. You'd been talking in these, however many it was, what was it, 10, 12, I can't remember.
Yeah.
Like kind of ratios, and you knew roughly where everybody was on the rates. And then the next day it's like, and we were still kind of like converting in our own mind what it used to be like, you know, dollar mark, the Deutschmark. And, you know, it took some period of adjustment, but
what a day to be a trader, I'd imagine. That must have been quite interesting.
It was really fun.
Brilliant. Well, just on the kind of final note, guys saying morning all, wishing happy birthday to Jay for next Tuesday. Jay had to pop off now, but yeah, thank you on behalf of Jay. And yeah, it's been a fascinating conversation today. Some great comments, and again, if you guys watching this on the record, just feel free to pop in the comments, and we'll try to come back to them next week like we did today. And yeah, great.
Have a lovely bank holiday.
Have a great bank holiday, guys. Great week, and
enjoyed it a lot, guys, as always. Thank you very much for tuning in. Bye. Cheers.
Thanks, everybody.